Hi, everyone. Have you ever had any interest into understanding value add opportunities? Well, today I have a guest who's not only a real estate investor, a house flipper, and also has experience in property management. He's going to give us his insight and knowledge. Please welcome Matt the Lumberjack Landlord.
Super excited to be here. It's awesome. Love the channel. Love how in-depth you get for your folks, and so excited to be here. So excited to answer any questions that you and your viewers might have.
Awesome. So let's just jump right into it.
Cool.
First, can we just hear a little bit more about your real estate journey? What maybe you're focusing on today?
Sure. So my real estate journey was I've been doing this for a little over 20 years. I've been in tech for 25 years. So I went from tech, making some money in tech and going, where am I going to put this? And didn't like the stock market, like the fact that real estate was a physical asset, like the fact that, it was a hedge against inflation, and basically was a, extremely well-paying dividend stock, if you will. So loved that about it, and was a big fan of Monopoly when I was growing up.
Yes.
And so, yeah, so it was one of those things that kind of, came together nicely. But my journey now over the last 20 years in real estate is we've got almost 30 buildings. We're 70-ish units right now, and that's always in flux. And then, we've done flips, we've done, value add properties where we buy them and they're just complete and total junk. I'm the fan of buying the worst one on the best street and redoing it, because that's where you get that's where you can get a lot of unearthed value.
Right.
And then what I'm looking at right now is, quite frankly, one of the things that I believe is going to occur in this market is a slowdown. I think that I don't think it's a crash. I think it's going to be a slowdown. Myself and other experts, we talk all the time, and we think that it's a slowdown coming. But with that slowdown comes from a red hot, 100-mile, 120-mile-an-hour pace,
Right.
comes inefficiencies in the market. So I think that there's going to be opportunities in this market if people can know their market, understand what they're looking for. And essentially I do what's called creating a buy box and a rent box, which is understanding the kind of properties that I want to target, understanding what they're trading for in those markets. And then the same thing on rents, understanding what those units are renting for in those markets. And that's how we then put together the magic of this is a property worth buying.
I see. And what is your market, and how deep into your market are you? Do you look at only specific streets? Are you looking at the whole entire city? How do you observe it?
Oh, great question. So we started off with one zip code. Now we are 4 zip codes. And so that grew over time, but it was understanding the one zip code, making sure that we had the process, both having kind of engineer/software backgrounds. It's one of those things where it's, kind of everything's process oriented, garbage in, garbage out, but good in, good out, largely speaking. So it was really just a matter of understanding what our process was around that single zip code, looking at what the values were. And when I say values, it's not talking about price. It's actually talking about value. So when you're looking as an investor, I'm always looking for what's that, I call it the ROC, which is ROC, return on capital. So I'm always looking for what the ROC is. And my return on capital on single families is, particularly in my area, isn't quite frankly that good. So I owned a few of them. They were usually flips that I got into and said, you know what, this is such a nice neighborhood, such a nice area. I can get decent rent here. And so this is just one of those decent appreciable assets that I'll sell when the market's really hot. But that was kind of the approach that we've taken so far.
Got it. So then say if I'm an engineer, I'm brand new into real estate, and my mindset is, well, what's the best zip code? Do I just look at all neighborhoods across the entire United States and, plug in cash flow, whichever one has the most, I'm going to go for? Is there a limitation to that approach?
I think the limitation is time. I think the funny thing is that, what I love about working with engineers and software engineers in particular is you can take a data-based approach to it, and you could probably consume all the data in the States and actually come up with an algorithm that actually then says, here's the area that you should be investing. For me, I'm more on so I love that approach, but I'm on the other side of it as well, which is I want to be able to touch, feel, smell, I want to be able to get my hands on that. And so one of the models that we had in the very, very beginning for us was actually a rule that said, if it's not within a half an hour of where we live, we're not going to touch it.
Yeah.
I needed to be able to get there in an emergency. And there is something to be said for doing something remote. If you find a fantastic area and you can build a team around that, that's pretty tough to do when you're doing that remotely. And that's your very first deal. That's a pretty daunting and scary task, because I've just heard so many stories of people just getting absolutely crushed with either fees or bad maintenance or bad tenants or damage. I like to be able to do a drive-by when I'm out picking up pizza.
Yeah, that makes sense.
Yeah.
And it's especially just like knowing, and if you're only 30 minutes away from it or so, you have a more in-depth knowledge of what pockets are good and which ones aren't.
Yep, exactly. So, when something comes up in one of these cities, in one of the cities that we do business in, there are roads that we do avoid.
Okay.
Yeah. Or that we take a drastic discount to the asset. We look at the asset, we just say, all right, well, yeah, I mean, the numbers work, but that's basically like a demilitarized zone over there. And so, there's some of those areas. And so we tend to not go into those areas, but every once in a while it can be like right on the edge where you're like, it's a tweener.
Yeah.
So we'll say, we'll still, if we can still get it at the zone, what I would call the demilitarized zone discount, but I can get it and it's right on the fringe. Yeah, it's probably a deal that we'll try and put together.
Okay. And then what are some things that you look out for? Like, so for example, for me, if I'm looking at a property, maybe I'll look at the map if I can actually go to it, and I see how close it is to a major highway. I like zoom into the Google Maps. And if it's too close, I'm, kind of want to maybe stay away because it might be too loud. So what are some things that you and your team may look into?
So highway certainly is one of them. That certainly has been a thing that we've seen in the past. Usually the things that we look more for are attractors, not detractors.
Okay.
So we're usually on the attractor side. So is it close to a college? That in many cases is an attractor, because we'll actually do a cost benefit analysis looking at the price of living on campus versus the price of living off campus.
Oh, nice.
That's been a huge win for us. We've done a ton of student housing. I know that when my wife was a student, we had a really difficult time finding a landlord that wasn't an absolute creepo. And so we wanted to kind of bring that service to the market. And so it's nice because we text message, we Venmo, we do all those things. And so people don't feel weirded out. We also let them know, listen, we're not stopping by unless you invite us or we hear there's a fire. If it's not one of those two things, you're not going to see us. And so really we look for kind of attractors. So colleges are certainly a part of it. Downtown, in like smaller cities, like the 20 to 35, 20 to 40,000 count cities, there's usually a vibrant downtown area. And if it is vibrant, then that's something certainly that we look at. We look at, is there new development occurring? Because that means big dollars are being invested in those areas, and the rising tide lifts all boats. Where I'm from, there's some buildings that just went in that are 2 bedrooms that are $2,200 and $2,500 a month. Wow. I love that number because when I bought my buildings, my 2 bedrooms 10 years ago, they were $1,000, and now they're $1,600 with just doing essentially a lipstick remodel.
Yeah, that's terrific.
So value there for sure, and watching what other big dollar guys are doing.
So where do you find, I know one method is just searching on Google. So one of my areas that I used to live in New Jersey, South Amboy, I would just type in South Amboy new development, and I could see like what new buildings or things are popping up. But what are other ways to find new development opportunities?
So as far as new projects coming on board, if you've targeted a town, because usually that's what I've done is we're close. So I know every town within 30 minutes of me. I'm in New Hampshire. And so the interesting thing is I'm less than 30 minutes from Mass, and I'm less than 30 minutes from Maine. But I won't do business there because they're not landlord friendly, which, by the way, New Jersey is not very landlord friendly.
I know. They extended it to January.
Yeah. So that's the biggest challenge that we look for and look to avoid is, I had my choice 20 years ago when I was looking to invest. Do I invest in Vermont, Massachusetts, New Hampshire, or Maine? And as I did my research, Maine was a little bit scary. Mass was a lot of bit scary. Vermont was really just too far away, but still plenty scary. And so New Hampshire was great just because, they have a little bit different of a tax structure, i.e. property taxes are much higher because we don't have an income tax and we don't have a sales tax. And
Okay.
so property taxes are significantly higher. However, it does allow the state to align better with the landlord because
I see.
they want their property tax.
Okay.
So
So you're giving a lot of great info here with
yeah,
looking at property taxes, the landlord laws, new
yep,
development,
yeah,
the part about the colleges too.
yep,
So I want to
sure.
take a transition here. Let's say, you know, you've given me like this info. I decided to read some other knowledge and I've discovered like what my market is going to be. It's 30 minutes away, but it's in an area that's thriving.
Yeah.
Now, at least for someone like me, I've only done turnkey properties where I've
Okay.
lived in it and rented it afterwards, but I'm ready to take that next step into value add opportunities. So what would be maybe the best way to start getting your feet wet into that and what to look out for?
Sure. So in value add, now are you talking about basically finding something that's more dilapidated that actually needs some work done to it?
Yeah, I'm not sure if I'm ready for a full gut rehab, maybe
Yeah,
just more
sure.
like cosmetic, like
Yep.
redoing a kitchen that's from the early 2000s.
Yep.
Uh,
Yeah. So we
yeah,
call so we call them basically we call it a lipstick, which
okay.
is just like it sounds, lipstick, which is just paint, maybe some flooring, maybe cabinets,
Mhm.
maybe some new fixtures, new lighting fixtures, things like that. And then we'll do gut, and then we'll even do gut and then additions. So
Oh,
we kind of cover the entire spectrum. There's a bunch of stuff on the website that actually I walk people through my flips and I show them the different
nice.
materials to use. Because there's materials that we've used that we recognize that we also look for value in material. So we're
Mhm.
not just looking to buy the most expensive or buy the cheapest. We're looking to buy something that gives us the best value for what we're buying. So as you're looking, like I said, I think the big things are the three biggest expenses that we find because you're in the Northeast. Three biggest expenses we find are going to be roof.
Yeah.
They're going to be heating system, and then it's going to be usually kitchens and baths.
Okay.
So those are the three big ones. So I'm always looking at when I'm walking in the door to a new prospective building. First thing I'm doing is stepping 15 steps away from the building and taking a look at the roof. How old is
Gotcha.
it? Is it a triple tab shingle? Is it a metal roof? Is it a rubber roof? Is it
Hmm.
a architectural shingle roof? That starts to tell me what I really need to start understanding and knowing. Then look at the heating system. How old is it? Is it one pipe steam, two pipe? Is it forced hot air, forced hot water? And then starting to evaluate through that process because I know how much each of those costs to
I see.
then redo. So that's what I'm kind of doing as I'm walking through the property. And then as the rest of the journey through is then looking at the kitchens. Was it something that was, Home Depot, Lowe's special, cardboard, that wafer board stuff that you see at the bottom of a lot of cabinets that are kind of builder
Okay.
grade, or that oak cabinet
Hmm.
that's just uglier than sin. There's a reason they put those in because they were cheap and it was a spec
Yeah,
build.
I
And
see.
so for us, one of the things that I did was I got with a cabinet company and worked with them over the course of years. And now we've probably done 50 kitchens with them. And, we kiss some frogs first. I won't lie. We kiss some frogs first, but a lot of times you can find vendors on Craigslist and things like that that
Hmm.
actually only have a warehouse. And so they don't do just in time type of stuff, which is where
Hmm.
really where you're going to pay a lot of your money. But those are some of the things that we've done. So, we've knocked the cost of our kitchens. They used to cost us about 10 grand. Now they cost us about 4,500.
Oh,
And
wow.
that's, yeah. So we've done a really good job of the way that I look at what I call my party board, which is the property and what we're going to do with it. The way I look at the party board is it's a bunch of knobs and levers. And most people only look at the expense side or they only look at the income side. So what you have
Right.
to get really good at doing is looking at both and then assessing value that you can associate to each of those items to say, all right, if we spend a little bit more, get a little bit nicer of a kitchen, yes, we can get a cheap kitchen done for $2,500 or $3,000.
Hmm.
But we always tried to build to an A- class at a B
Okay.
price. So we're even creating value for our tenants. That's what we like so much
Hmm.
about the process.
I see. So just jumping right into that
Yeah,
piece of
sure.
understanding how much of an upgrade should you do? Like you're saying you do A minus for B quality tenant, you said?
Yeah, so we do A minus quality product for a B price for an
Okay.
A tenant. So we're
Okay.
looking for that A
Gotcha.
tenant because we can get them because, so as an example, so I had a property that I just finished. We posted it on a Thursday night.
Mhm.
By Sunday night, we had 460 inquiries.
Wow.
Yeah. So
That's
one would
crazy.
say that we underpriced
Where
it.
where did you post it? On Zillow?
So literally it was a majority of that was Craigslist,
Okay.
apartments.com and Zillow. And I think there was one other one, but usually for us, believe it or not, we actually spend most of our time. We'll just, because Zillow now costs money, Craigslist in
Mhm.
our area doesn't. It might in some other areas where I think it's like $5 or $10 or something. It's pretty cheap.
Yeah.
But for us, Craigslist is still free. And so we get probably 90% of our tenants from Craigslist or 80% from Craigslist, 10% from other, and then the other 10% is just referral. And actually this year's been nuts because I think we've probably been 80% referral and only 20.
Wow.
Yeah, we've grown a lot. And because we
Mhm.
treat our tenants right, because we have good product, because we have the right support staff to go over and fix things. Every once in a while, people see my beautiful, luscious beard showing up at 9 o'clock at night to get their heating system going again.
Yeah.
And so we can do that. But because of that, it encourages people to say, listen, this guy's on it. He's going to take care of me. He's not here to be my best friend, but he is here to be a great landlord. And that's what
Right.
I love. So we have a lot of renewals. This year, our renewal rate was right around 94%, over
That's
70
excellent.
units. So yeah, big number. And that's what we really try and go for. And it's been really successful so far.
What are you using to track that renewal rate?
Um, Excel spreadsheet. Yep, still
Yeah.
lame. That's still lame. Hey, Excel has its place, and that's its
It does.
place.
It does.
Yep. So that's its place. And so I have, like every other data geek out there, I've got this massive spreadsheet that I just, sit
Yeah.
there and just Google at every once in a while, at night, just kind of like, that's so good. I think we need to get like 8% more out of that unit based on what we just were upped on our taxes. And so I really run our business, from
Mhm.
that spreadsheet and then just what I know about the market.
Got it. And how do you feel about, say, if you're like, what point of your real estate journey do you feel
Mhm.
like you're only allowed to scale if you have the right tools in place,
Um,
like Excel spreadsheets?
in the beginning, yeah, I mean, in the beginning, like you want to be dialed in on that first house. Like you want to
Mhm.
be dialed in on that first house. You want to know you have the Excel spreadsheet. You want to know that, I mean, contractors are going to come and go as we've gone
Yeah.
larger and larger and larger. What's really neat for us is that once we find somebody that we really like, and they're not the cheapest, but once we find somebody that we really like and that is easy to work with, we actually stick with them. So I've had the same plumber now for 18 years.
Wow.
He's done almost all my stuff and he's not the
Yeah.
cheapest. Say electrician, we've had one now for 4 years, and the one that we had before that we had for about 5 years, and the one before we had that was there since the beginning. In fact, I was his second customer, as opening up as an electrical company. So I think
Yeah.
that process is really, 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 really important.
Mhm.
um, you have to be able to manage expenses, you have to be able to manage costs,
Yeah.
um, and you really have to understand, before you tackle any project, what the unforeseen might be as well. It's tough because you don't know until you don't know, and that's where the school colors are black and blue.
Yeah.
But you try and learn from other people's mistakes as much as possible. That's why a lot of the stuff that I produce is, some of it's talking about the number side of it, but I
Mhm.
have a ton, probably 15 or 18 videos based that we've done on rehabs, showing people this is what you should be looking for in a rehab for a product.
Yeah.
Because I've made the mistakes. I bought the cheaper product and watch it fall apart in 3 years. And guess what? Then I had to pay $45 an hour to have new stuff put in.
Yeah.
That was a loss,
So
you know?
it's important to understand like the background knowledge of how to do everything beforehand, learn from
Mhm.
mistakes, but also don't look to repeat them.
Yep,
And
absolutely.
say if I'm someone who's now going to check out your channel and
Sure.
wants to know like where to get started, like which video should I try to look for first, or a playlist, how
Yeah,
to dive into it?
I think it depends on what part you're diving into, honestly. Because I think, like, I literally just
Yeah.
posted a video this morning that is saying, hey, if you're looking into real estate, here are things that you need to make sure you're understanding about our current world, right? Eviction
Yeah.
moratorium being extended. You probably need to have more cash than you thought you did. This is not something to do living in the margins or like what I call a squeaker. It's not like, you don't want this one to be kind of close where you're kind of like wincing a little bit and like, this is going to be close. Do not do that in this market.
Right.
There's going to be opportunity for sure, but largely speaking, I remember the opportunity that came about after the '08 Great Recession. So I've been investing for 20 years. So I saw basically the dot-com bubble burst. I then saw the runaway train. I then saw the Great Recession. I then saw the Great Recovery. And then I saw the steady climb. And then I've seen the insanity over the last, 24 months, the pandemic insanity. And so I've bought and sold in all of these markets. One of the things that I track very closely is something called the affordability index.
Okay.
The affordability index is available for pretty much every single state out there, and it's usually put together by your state's board of realtors.
Okay.
So New Hampshire is like NHRA, which is New Hampshire Realtor Association. And so it's always a .org, but you can look it up, and then they'll usually have a spreadsheet that shows you, here's the affordability index. The big thing is understanding kind of over the last 15 to 20 years where your market's been. Because what you're looking for is, and this is what I love talking to engineers about, right, is you're looking for that comparative analysis.
Yeah.
You're looking at it saying, am I historically hot? Am I historically cold? Am I in the red zone? Am I in a zone where it's like, you know what, it can go up or down, we're okay. And so that affordability index is something that, excuse me, I look at a lot, just because I'll actually sell properties. And so New Hampshire right now, they scale it between like 1 and 200. And what the way it's scaled is anything over 100. So between 100 and 200 is how many the percentage of people that make the median income that can afford the median sales price of a house.
Okay.
And so it's a good way to understand, are you getting into an expensive market? And so we just broke our record, which is now we're a 101, which means we're a 1. Means 1% of people make the median income can afford a median house. 1%. That's a bad market to be buying.
Yeah.
In. It's a bad market to buy in. And so I'm not buying single family houses now unless they're flips. And I'm quite frankly not buying flips now because who knows what the world's going to look like in the next 6 months. But yeah, my evaluation and looking at it is I look at that affordability index, and I just because I don't like an asset in a market doesn't mean I don't like the market. So I've been buying a lot of duplexes, triplexes, quads because the return on capital is extremely good there.
Okay.
The 5 to 20 unit buildings, the price per unit is ridiculous right now. The single family home is ridiculous right now, but the 2s, 3s, and 4s, they actually show really strong return on capital, where I just bought an MLS deal that has almost a 20% return on capital.
Yeah, it's incredible.
Yeah, it's I wish I had some query that actually I could just set up and show me that, because I had to do all the work myself.
No, but that's a really good point. That's not just like, all right, single family doesn't work here. This whole market is, scrap it. You just have to find potentially if there is an asset that works.
Yeah. So to that end, we'll actually look and we'll evaluate what's the return on capital or what's the monthly price that we're going to get on a single family versus what we're going to get on a unit in a duplex versus what we're going to get on a unit in a tri and unit in a quad. And usually the larger, the larger number of units in a building, usually the price per unit goes down, even if you're grading it on the same quality. But what's been most interesting is, we've seen the price of a duplex unit versus the price of a single family home. Now the differential is less than 10%.
Okay.
So at that point, if I'm buying a single family home for 300, but I'm buying a duplex for 450, but my rent differential is 8%, well, then I just got 92% units versus 100% unit.
Yeah.
And I only paid 50% more. That's where I'm saying that's where we're actually looking at evaluating asset class in a given market, because we don't throw the baby out with the bathwater.
I see. Yeah, thank you for breaking down those metrics. That really helps. Sure. And for your knowledge thus far. Before we get into how to find you, I do want to ask you, do you have any daily habits that maybe you do every day to get you started and get you in the right mindset?
Yeah, I mean, I think every day I look at my market. Every single day without fail. If you look at the last 20 years, I've missed, even on the days my kids were born, I still looked at my market. It was that, because it's kind of, 15, 20 minutes. And
Yeah.
that gives me enough of a broad view of what happened in the market. And that broad view that I'm able to create, it ensures that I'm staying in touch, but it also makes sure that if there's that opportunity, then I'm spending 10 or 15 minutes more on that one opportunity.
Mm-hmm.
And not every day is there an opportunity. I have 3 towns that I'm in, but I have really kind of 4 different asset classes, or 3 different asset classes. I look at single family, 2 through 4s, and then 5 pluses. And so I look at all 3 of those asset classes in all 3 of those markets. And so it's 9 searches. So every day I'm looking at 9 searches, but I'm so stone cold in my market. I know exactly what I'm looking for, exactly where value is, and can usually look at it. And, for the last few months, it's not been hard to get through my entire market in 10 minutes because it's a bunch of, overpriced
9
junk.
searches in 10 minutes.
Yeah. It's pretty quick. Yeah. And what we'll find, because as you know, for the last 6 months, there wasn't a lot of, prior to the end of June, there wasn't a lot of coming on the market.
Yeah, it's true.
So it was so thin, that those 9 searches might only net me 20 things to look at, 25 things to look at. So for those 9 searches, I was literally having days where I was only getting results rendered for 4 of those searches. So it made it pretty quick. Now that's been a lot more time I'd say in the last few weeks. That's definitely started to tick up kind of to the July timeframe. There was a lot more there that we were starting to get through. And so that was definitely longer. And we bought, I think what have we bought? 3 is 4. So we've bought 4 since June 1st.
Wow.
Yeah. Cause they were just, and 3 were on market and 1 was off market.
That's awesome.
Yeah. It's fun. I love buying houses.
I think I forgot on Michael Zuber's channel if you said that one of them, like you did like all cash or like all like that, or some finance. How did you?
So I am major anti all cash. I hate all cash deals, but I do them. It's one of those things where it's, if you're starving, but you don't like chicken, do you still eat the chicken? Yeah. Cause I'm starving. And so we've done some cash deals. The reason I don't like cash deals is because usually on your exit, when you refi out, I don't like owning anything. I want to own it. I want to have a mortgage on it. I don't like owning anything free and clear. Because the worst way to build your business is use all cash and no leverage.
Yeah.
Because I'll outgrow anybody 10x if they're using all cash and no leverage. So the key is healthy leverage. And so when you buy a house for cash and then you try and refinance out of it, you're likely from your bank, and I'm a little bit different because I'm over that 10 number with Fannie Freddie, so they won't take any of my loans. So I have to find privatized lending, which is people that portfolio my loans. And so for me, I have to evaluate a higher rate, number one. So where other people are getting mortgages right now in 2.7, 2.8, 2.9, I'm paying 4.25 and I'm happy. So I'm paying significantly more on a percentage wise. But as I also look at the deal, they're only going to give me usually 70% loan to value. So if I'm buying it for 200 or buying it, one I just bought for about 300, I'm going to put 30 into it. It'll appraise for about 4 or 410. Well, when I go to refi it, I'm only going to get back what I paid for it. I'm not going to get back the 20 or 30 grand I put into it for a project. So now I've left 20 or $30,000 behind there. And I don't love that because I like to recycle my capital.
Yeah.
But that's one of the things to look at. So not a lover of cash deals. I'll do it if that's the way for me to win. But if I can win without it, I try to win. I see.
Yeah. Use leverage. Yes. Awesome. So where can people find you, Matt?
So lumberjacklandlord.com and Lumberjack Landlord on YouTube. We're pretty active out there. Also, Mike Zuber's channel, One Rental at a Time. He's fantastic. He actually retired from software, so he's a lot of fun to watch. We kind of, because we grew up in the same business, we kind of have a lot of fun talking about that. But he's great. His book is excellent. It's a must read. But yeah, so One Rental at a Time with Mike Zuber, and lumberjacklandlord.com. and Lumberjack Landlord on YouTube, you can always find me telling you the truth and hitting you with hard facts.
Excellent. Thank you so much for your time.
Happy to do it. Thanks, Ariel.